Let's talk to Mike van Dulken. He's the head of research at Accendo Markets. Very good morning to you, Mike. Right, we've got some thought-provoking slides to go through. Without further ado, let's kick off with the first slide, British Petroleum, BP. What are your thoughts here?
I've been keeping an eye on this one for a while, looking for a meaningful breakout, certainly beyond that falling trend line, which goes all the way back to mid-2006. So that was the breakout, was around £5.40 thereabouts. So that was the first clue. Got us beyond that as well as to the best levels in 3 or 4 years. But more interesting is that break above 5.53, which goes back to early 2012. Don't forget BP's still in recovery mode from the Gulf of Mexico. That's the sharp drop there in 2010. So it's still got some catch up to do. Those breakouts, I mean, some might say it's still a little bit early, but if it does open the door to, it's more than 15-20% upside there to £6.40, that's a considerable bullish upside for the shares. And what I think is supporting this is the next slide, looking at Brent Crude oil, which itself has broken above the 70 mark.
Yeah.
And if that is indeed a bullish flag, so we look for a repeat of the initial up move. If you look at the rally, I think it was 43 to 70. So you're looking at
27. You're up to $100.
From about the lows of 63, though, project that up takes us to around 90,
okay.
Which is a nice coincidence. It corresponds with the support, which may well from 2012 around 90, which may well prove resistance this time, and then there's actually a shallow trend line going even further back around 100. We didn't think we were going to be anywhere near 100 a long while back, but the OPEC-led production cuts are helping.
Yeah.
And of course, last night's news from Donald Trump about the US leaving the Iranian nuclear deal could further tighten the market for oil, which only would work in Brent's favour as well as BP. On the flip side, I guess the thing to bear in mind is if we see a rebound the pound, that could be a hindrance for BP in terms of the weaker pound at the moment flatters the value of its profits and its dividends. So that is an extra buoyancy aid, if you like, for the moment. The pound's pretty weak. It does have a significant bounce off the lows, although with, as your political guy was talking earlier about, the run of Brexit defeats in the House of Lords is certainly keeping the pressure on that, and the likelihood seems to be pushing us towards a very soft Brexit, or indeed some cobbled arrangement of remaining in the EEA and the customs area.
Okay, well, I know which way I'd be on that chart. Okay, let's have a look at BT, a true laggard. What are your latest thoughts on this?
Yeah, so we've got two charts here. Firstly, this is the medium-term chart. I'm trying to highlight here the fallback from the channel ceiling around £2.50. Then we've broken below the lows of April around 240. Now we've gone up to test them again, but for the moment it remains resistance. This could be a bearish flag, so the reverse of what we just looked at on BP. So from 238 we could see another leg lower towards the lows of 220 in March, which just extends this downtrend. I think the next chart just shows how long this has been going on for.
Yeah.
We go back to early 2016, the channel itself may have narrowed a bit, but ultimately the message is that these shares could well be headed towards lows of 200 that were last traded in around this time 6 years ago.
Wow.
It does still have its woes. It's still struggling from that accounting issue in Italy.
Yeah, that was 500 million, I think.
Yeah, it wasn't much, but it was the old skeletons in the closet thing. Could there be more? Furthermore, we've got the much more bullish news from Vodafone out spending money in continental Europe this morning, buying up nigh on 20 billion worth of assets from Liberty Global to become it's gone from a pure play mobile to now being one of the biggest broadband operators in Europe. So BT's struggling to face the enforced transparency on Openreach, opening up its network for wholesale, and indeed struggling to keep growing its market share. So opposing messages from the telecom sector there this morning, and indeed, if you look on the charts, it's rather the same.
Okay, let's wrap up with easyJet. Obviously, there's a programme on British Airways at the moment, 100-year history. I don't know if you had a chance to see that, but they suggest that easyJet were going to come and go when they sort of at inception, and here we are, FTSE 100. And it looks as if that could break to the upside, right?
I'm actually wondering whether this range might have a bit of legs.
Okay.
I mean, the higher oil price is not going to play in its favour.
Yeah.
No matter how good you are at hedging, at some point it does kick in. But you're quite right. A break above 1670 could well open the door for a continuation of the longer term uptrend. I'm interested in that down candle today. We're still within the range of yesterday, so it could be a bearish inside day if we do turn lower. It may be a bit early to call that, but it's actually a fair bit of downside. It's more than it looks on the chart. Could have 5% down to the lows again before another uptick. Obviously, we've got that rising trend line, so it could well have been, as you're quite right, a period of consolidation for resumption of the uptrend. But I think it's difficult to preempt it before the breakout.
Yeah. But if you're a day trader, okay, you could sell into that trend line and have a buy stop above just in case you do get the breakout.
Absolutely. So, I mean, you could quite easily set up a form of straddle looking for the break to the upside as well as a break to the downside. Maybe a break below 1620 confirms that you're turning lower. A break above 1680 confirms you're out of that consolidation range with more upside. But
there are times, okay, where these sort of charts, okay, very useful in terms of paying your gas bill because you know your key levels, don't you?
That's it, yeah.
Finally, in terms of clients, are they busy at the moment generally? Has everyone sort of worked out that this market's got more legs? Is everyone cautious?
The FTSE remains in that strong uptrend from the back end of March. The trend it's in has narrowed a bit, but the rising support remains pretty solid. I think what's very interesting this morning is markets are very calm despite what Trump did.
Yeah.
I think a lot of it may have been priced in. He laid the groundwork for. I mean, he's great for saying I might do it, I might not, but I think markets had erred on the side of caution that he might not. The other allies are still on board with it, so it's not like Iran's going back to enriching uranium. We should all be incredibly, petrified about the Middle East. But the pound remains weak. That's a buoyancy for the FTSE. Earnings season, on the whole, pretty good, especially among the big caps. This is despite many of the big defensives, the bond proxies still being shunned, still having a tough time. But when you've got the big name oils still pushing north, and the miners still doing okay, despite emerging markets coming under a bit of pressure from that strong dollar at the moment. For the moment, the bullishness is still there. Whether the old selling may go away comes into play, I'm not sure. I've been reading quite a bit at the moment about how political instability or political gridlock and inertia is actually a great thing for markets because there's almost zero legislative risk. So it's not great to hear what's going on in Westminster at the moment, but the chances are we're heading towards something very soft in terms of Brexit, which would mean we're very close to what we had, which the markets were still relatively happy with. I'm talking about financial markets, not the electorate. So it could well be that it's steady as she goes, no major negative surprises on the horizon, in which case not too much to be petrified about. I mean, just look at gold after last night, almost flat.
Well, it's extraordinary that there was an Egyptian billionaire this weekend saying that he was going to put half of his net wealth into gold.
Well, unless he's either predicting, Armageddon
with Chinese
that's
slowdown,
or indeed a huge move on the dollar,
Yep.
To the downside. But if you look at where the Fed is and the Bank of England, they're at opposite ends of the spectrum in terms of rate hike expectations. Yep. But the Bank of England has just evaporated over the last 3 weeks to a month. Whereas the Fed, steady as she goes, further hikes, we're waiting for one in June. So if anything, the dollar, could well keep creeping, certainly against the pound, which is only going to keep pressure on the commodities.
On that note, Mike, thank you very much indeed.
Thank you.